This is Edible Economics, bringing you the important topics of our times as we turn noisy headlines into bite-sized issues you can actually digest. This program is for information only, not investment advice. Here's Andrew Tang.
Everybody, welcome to Edible Economics. This is the second episode, and today I am here blessed by the presence of John Kostic. John Kostic is a veteran in the industry. He's been around doing business in the financial industry, helping clients for over 30 years. But not only that, he is also a real veteran because he formerly served in the U.S. Army as a captain in the attack helicopter space. So, John, welcome aboard. I'm so delighted to have you here.
Thank you, Andrew. Yeah, I'm glad to be here. Appreciate the few minutes.
Yeah. Well, John, today we're going to talk about Iran, obviously. The most obvious reason, that's the 800-pound gorilla in front of everybody. We want to address the issue of the chaos that's going on right now. Also, the clients are asking, hey, how long is this going to last? What are the disruptions and what are the drivers for the market? Are we heading towards more inflation and things like that? So these are the topics that we want to cover. So let's get started.
Well, looking at the response that Iran has given towards the U.S. and Israeli attack, you can look at how long, to answer the question first, how long will they go? Before they started, best estimates were that they had about 25,000 long-range missiles, ballistic missiles, and drones. A lot of that capability has been severely depleted through the previous attacks and most recently. That's been the United States part of this equation. They've been attacking the missile silos. They've been preventing the drones from launching. They've been preventing the drones from being remanufactured. At one point, it was estimated they had maybe the ability to produce 10,000 new drones a month. I think that has also been severely hampered. Israelis have been attacking the personal infrastructure. If you notice from the big headlines of when they took out the leadership, their attack pattern is now moved to where they're literally bombing individual police stations throughout the country. All of this is being done in support for helping the civilian population eventually take over. But right now, Iran has put itself on an island because there's been a lack of command and control. Quite frankly, with institutions like this, you don't train the bottom line subordinates to make good decisions. They've been launching rockets at everybody they can throw them at and have effectively alienated any potential support for themselves. When they send rockets against their quote-unquote allies in Bahrain and Saudi Arabia and Jordan, well, now they've nobody's supporting them. The Houthis, other groups aren't getting the money, aren't getting the financial support, aren't getting the military support. All of these groups are hopefully going to be eliminated. Right now, to me, the big question is, how long will the U.S. be able to support this whole operation? Because we're spending a lot of money. Advanced missile systems cost tons of money, and there's only so many of them to go around. But I think that President Trump gambit here is that if we can move in, strike as quickly as we can, take over, we've already taken over the air, we've already taken over the sea, we're eliminating as much of the military infrastructure. Eventually, Israel and Kurds will start taking over from the personal side. We'll see where we go from there. But from a military perspective, fantastic. Absolutely amazing the amount of coordination that our nation has been able to do. Just think of how much has to go into flying a B-2 bomber 36 hours to hit a target and have them returned unscathed. We are very blessed to have this kind of military.
Yeah, absolutely. I forgot to mention that. Thank you for your service, John, by the way. And so now experts believe that it's only about a matter of days. But in terms of drones, it could last a little bit longer. And experts have also said that the next leg of attack, most likely it's going to be cyber attack as well. So that in turn, it's another way to segue into which sector of the investments are good right now, given everything that's going on. Couple of questions here. Would you buy oil sector right now? And would you buy defense sector right now?
I think the defense sector is going to be a much longer, steady play, because as these weapon systems are expending rounds, they're going to be replaced. Unfortunately, after this entire conflict is resolved, we're still going to have conflicts to be prepared for in the world. Oil much more volatile. The oil market is spiking up a little bit. It was handling the news very well earlier in the week. It's gone up a bit today. I think that unless you're very active following the oil industry, for my average client, that kind of volatility is something they're not willing to do a trade on. We usually work with clients that are looking for longer term thesis of an investment as opposed to a 20-minute trade. So I'd stay out of oil for a little while, let the volatility settle down. But from a long-term perspective, the defense sector and cybersecurity, all these different areas are going to be very attractive for the rest of the year.
Yeah, I agree with you because the oil stocks and the oil companies, oil sectors, their investments have basically ran up quite a bit. And there's still a long-term demand destruction here until China is fully back online and really pump up the demand. I really don't see, just because the Straits of Hormuz is closed right now, that the disruption in oil supply is going to last much longer. With that, I still think the sell-off in the stock market, largely driven by SaaS or software as a service, AI replacement theme, sell-off has been quite overdone. Many of the companies that have good prospects into the future with this AI build out, it's still very much undervalued. So in my view, I think the tech sector is still the place to be for longer term growth from my perspective.
There's definitely some values coming up when you look at a company like a DocuSign, which is down 56%. There's value there. When you look at a company like even Microsoft,
Yeah,
down off
Microsoft,
its high tremendously, still generating huge amounts of cash flow. Maybe it was ahead of itself, but this is when you find value.
Yeah, well, I explain it this way because not all software companies are created equal. I put them into three groups. One is layer 0, is operating system related, and then layer 1 is database related, and then layer 2 is everything else. So Microsoft is layer 0. Oracle is layer 1, and everything else like Adobe or even LegalZoom, I always single out LegalZoom, they're layer 2, and those can be replaced for sure. With AI, without Windows, what are you going to run on? Unix, or Apple? Of course, you can do that, but not all everybody is going to switch to these type of software to start. So from that point of view, I wanted to know any other areas that you see there could be a possible disruption to global supply chain, for example. Now that the airspace are closed, a nearby region, and the transportation for shipping obviously has been under greatly stress and require U.S. Navy protection or the Ally protection. And from that perspective, I think manufacturers are getting their parts a little bit later. Could you see more disruption in this space?
I think so. When you think about disruption, I'll circle back to the defense industry as well. There's literally 5 major defense contractors that are at the top of the pyramid now. So that industry with new technologies and new innovations is also ripe for additional disruption, not from the supply chain side, but just from the new technology, new use of AI, new uses of intelligence, and new IP. So I look at companies coming up in that space, drone manufacturers. I was looking recently at a software company that is able to communicate video over AM band radio signals, which has never been done before. So as a communication company that has tremendous defense applications, looking for new applications like that is I think where it can really add a lot of value for clients as well.
Yeah. So in closing, just want to circle back on the winners and losers. So we both concluded that it's not worth it to chase after oil sector or oil companies, but defense contractor, especially if they are using cybersecurity as one of the products that they do sell, I think that is going to be a great way to prolong their revenue projections. And then some of the losers will be airline transportation, for example, because they're largely disrupted. And then some consumer discretionary goods when people are hunkering down and they're not spending on big ticket items. And then global manufacturing area could be disrupted as well.
At the end of the day, though, I believe this whole conflict is going to be negatively impacted Europe more than it will the United States. The supply chain issues, the oil issues really are affecting the EU and China and India more than will affect us. We're still the largest oil producer, the largest natural gas producer in the world. And when you can secure your energy, that handles a lot of problems.
Yep, I agree. And U.S. is still where the innovation happens. So great. All right. This is a good conversation. And I want to conclude here and make it short and sweet. And I want to thank you for watching and staying to the end. And this is episode 2 from Edible Economics. I will see you later. Cool.
The material contained herein is intended as general market commentary solely for informational purposes and is not intended to make an offer or solicitation for the sale or purchase of any securities. Such views are subject to change at any time without notice due to changes in market or economic conditions and may not necessarily come to pass. This information is not intended as a specific offer or investment services by Turner Financial Group. Turner Financial Group Incorporated and its affiliates do not provide tax, legal, or accounting advice. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. All statements made herein are strictly beliefs and points of view held by Andrew Tang and the source of references. Certain of the statements contained herein may be statements of future expectations and other forward-looking statements that are based on Andrew's current views and assumptions and involve known and unknown risks and uncertainties that could cause actual results, performance, or events to differ materially from those expressed or implied in such statements. There can be no assurance that any investment will achieve its investment objective. Although Andrew has taken reasonable care to ensure that the information contained herein is accurate, no representation or warranty, including liability towards third parties, expressed or implied, is made by Andrew as to its accuracy, reliability, or completeness. References herein to third parties do not indicate an endorsement of or by or affiliation with Andrew Tang. Nothing contained herein constitutes investment, legal, tax, or other advice, and is not to be relied on in making an investment or other decision. Past performance is not a guarantee of future results. Investing involves risk and possible loss of principal capital. You should consult a professional advisor before making any investment decisions. Turner Financial Group Incorporated is an investment advisor registered with the United States Securities and Exchange Commission. However, such registration does not imply a certain level of skill or training, and no inference to the contrary should be made. Additional information about Turner Financial Group is also available at www.advisorinfo.sec.gov. Advisory services are only offered to clients or prospective clients where Turner Financial Group Incorporated and its representatives are properly licensed or exempt from licensure. No advice may be rendered by Turner Financial Group Incorporated unless a client service agreement is in place.